What's going on, everyone? Today I'm gonna talk about NIO. I'm Jake Invest. Please like and subscribe. If you look here, it says NIO has a price prediction of $91 for the high and a low of $26. And right now it's already under the low, but the average is 42. So that's what they think that the company is worth on the average. And at the lowest, the company is worth $26 in 12 months from now. Right, this is a 12-month forecast, and they're saying it's a buy, almost a strong buy. But if we look at it, it has a $37 billion market cap, which is pretty high for a car company that's unprofitable, and a revenue of $5.95 billion, and a net income of negative $1.18 billion. So they're losing money. Look at their revenues. They grew their revenues every single year, so they are selling cars. They are having revenue growth, which is good. You come down here to net income, and they're losing less money every year so far, which is good, right? You want to see them lose less money every year if you're thinking about investing in a company. Now, if you invested here and they keep losing more money every year, that's a bad sign. But if they started down on a negative trend, however, we do not know what is going to happen in the future, right? They could lose more money than $4 billion. They could lose $6 billion in 2022. We don't know. Quarterly, they already lost $1.76 billion in the first quarter of 2022. They have a negative free cash flow. They did have a positive free cash flow at one point, but now it's negative again. And they have a common history of having negative free cash flow, but it does look like they're going to be coming into the positive free cash flow range soon from the chart. I mean, you got to look way more into the company than this. And they do have a share-based compensation, which means that they pay their employees with shares. They also dilute the shares. They've literally diluted it a lot. So they diluted it by 1,400% in 2018, and then they diluted it by 200%, 14%, 32%. That's not good. So they went from having like 300 million shares to 1.57 billion shares without giving the share owners anything, right? It's like I buy 1 out of 10 shares. A company brings out 10 shares, I buy one of them. Now I own 1/10 of the company, and then they were like, okay, well, I'm gonna issue 90 shares now. So now I only own 1/100th of the company, right? I just lost so much value in that company. I used to be a majority shareholder, and now I'm only like a 1% shareholder instead of a 10% shareholder. So they think that in 2022 they're gonna have a $61 billion revenue, 2023 a $100 billion. And then in 2026, they think their revenues are going to be $342 billion, right? It's going to be some next level Tesla shit. But is that in yen? That might be in their currency, so I'm not sure. It might be. Anyways, and then their EPS should go into a positive in 2024 from predictions. So yeah, that would be a good sign. And I would say the best time to invest is probably whenever they start becoming profitable. But you never know what's going to happen with the company. It could go down more in price, or it could go up more in price. I would say it might be at a fair value or possibly overvalued. Now that people say that it's undervalued because they say the low in 12 months from now it's $26. I don't know exactly what it's worth right now, but they say in 12 months it's going to be worth $91 to $26. They have a big market cap, right? Let's see Ford's. The biggest car company, they have a $45 billion market cap. They make $136 billion a year in revenues, and their net income is like $17 billion, right? But it has barely a bigger market cap than NIO. So NIO's a growth startup company. So you got to hope that NIO, a small electric car company in China, surpasses one of the biggest car companies in the world other than Tesla, right? So for some reason, EVs seem to have the majority of the wealth in the stock market. Now, this could be a trend that just passes because people are looking for the next growth stock that's going to make them a lot of money, which I understand. That's what I'm doing. I'm looking for the next company that's going to make me a lot of money for my investments, because that's what investing is for, is to have a return on it. And not only that, but NIO is actually making cars. I guess Rivian's making cars, Lucid is finally, but there's like a lot of other EVs on the stock market that aren't even making cars, like Mullen and a couple other companies. But these four electric car companies, Tesla, NIO, Lucid, Rivian, they are all making cars, which is good. That's what you want to see. And I think that NIO is going to dominate China in the electric car company. I just think they will. So, in fact, NIO just launched its much awaited ES7 SUV, the deliveries of which are expected to commence on August 28th. The newest SUV, available for pre-order in China on the company's app, will be equipped with NIO's latest EV technology. The ES7 has a range of premium features besides a 70k kilowatt hour standard range battery and a 150 kilowatt hour ultra long range battery. It will identify as NIO's fastest SUV to date, with one of the first certified passenger vehicles in China with the ability to tow a caravan or a trailer. So the prices for the standard 75 kilowatt hour battery will come at about 69,000 US dollars. The ultra long 100 kilowatt will be about $78,000. The ES7 Premier Edition will be priced at about $81,000. Customers who choose battery as a service will have to pay a pre-subsidy price starting at $51,000. Oh, you want to see what the EV looks like? So, yeah, this is it. Right there. Let's look at it. Oh, yeah. Look at that. Nice. That's actually pretty nice. Kind of looks a little Tesla-like with the headlights. Well, maybe I'm stepping on shoes right now, but yeah, I think it's a nice vehicle. It could definitely get a lot of sales in China. So, I mean, is it a buy? I'm not sure. I think that I might wait, sit back a little bit, and see what happens with the stock market in general, because I think the stock market is not done correcting itself. I think that today was just like a fluke, or maybe a bear trap. Everybody's like, oh my god, the market's going up, and it's going to be like, oh, the market's going down. I personally think I would prefer if the market stayed where it's at for a while, or just dipped a little lower, so I can save up my paychecks and invest more money into stocks, possibly NIO, if NIO goes down more. I think that I personally think it's overvalued, right? I think $37 billion market cap's pretty high for a startup car company that's unprofitable, but it could be worth what it is. It's just almost a Ford's market cap, so it's so hard to like justify buying a car company that's unprofitable with almost the same market cap as Ford. But Ford is old school, just, nobody cares about Ford anymore. So I get it. I mean, Tesla's like almost $1 trillion market cap. I mean, Tesla's way down now, but NIO could be the next Tesla. Who knows? Like and subscribe if you enjoyed the video. NIO, is it a buy? Possibly. That's up to you. Do more research in it. Don't just listen to me. I'm going to hold off. I'm going to do the hold. Just yet, I might buy in if the stock goes down a little more. I think it's definitely above my price range. And there are a lot of other good stocks out there you could buy for a cheaper price. So yeah, have a good night. Like and subscribe. Peace.